Equities always persevere, right? On average, they've been a good place to be. I think it's difficult to argue against the macro headwinds that we're fighting. But I think with all of that, we have to take a step back and realize that this happened very quickly. And just like that, we can go the other way. So I think we're going to take a step back and not worry about what might happen on a trade policy front and focus on the micro. And there's a lot of disparity and divergence that's happening on valuations. Again, healthcare, communication services, pockets of industrials are looking very, very good if you take the long-term view.
Sentiment, feels like it's growing negative really by the day. Today, Bank of America cuts their earnings forecast for 2019 to 166. You want to put a 17 multiple on that, you go 28, 22. They cut their earnings estimates for 2020 to 176. You go to 29.92 at 17 times. That's not fantastic. RBC's Lori Calvasina says you could go down to 26.50 this summer because of all this trade uncertainty, and we can get to more things that are mentioned elsewhere on the street. But what do you do with those?
Yeah, so I think caution is appropriate here. So I tried to play offense on Friday, into the rebalance, and I got stopped out of things, I think, quicker than I've ever gotten stopped out of anything. Last week I sold Facebook. There are very few things that there's bipartisan agreement on, and regulating the internet seems to be one of them. And then after the Pelosi thing, I just said, okay, I've had enough. I sold Amazon this morning. I shaved Google.
Were you going full-on bunker mode? I mean, you were negative. You were negative last week, right, to end the week.
Yeah.
And now you're selling some big-time
Those were not
stocks.
core positions. Google was. Alphabet was a core position. I shaved it. But you know what? The stock's really done nothing in a year. And then you had a quarter, which I thought was okay, but I was in the minority. Everybody else thought was poor. And now you're coming up in front of this, potential antitrust issues. If you go back to what had happened in Europe, it was just fine. It's going to be more than that because, as I said, it's bipartisan agreement. So I just don't see what's going to make me optimistic. Right now, Mexican tariffs not occurring is the base case.
I mean, at what point does the wall that we made that investors have to consider become insurmountable? Well, you just get to a point where how can you get over some of these issues? And some of these on this wall here may get more precarious. They may get worse.
They will. I think to Joe's point, we've got declining economic momentum throughout the world, and I think you're going to see that in the U.S. Because for the first time in this administration, there really is some doubt about if right things are being done. The communication, it seems like more knee-jerk and more desperation. So, look, I think your view for what you do is absolutely correct. For what I do, it's a different type of mechanism that I have to employ to look at risk going forward. I think I'll get a better point of entry.
Erin Browne, last time you were here, you were underweight equities, U.S. equities. You remain that way today?
Still very defensive, still underweight. And I think one of the things that you mentioned, the note that Bank of America published this morning, I think was interesting because one of the things that they mentioned in the note was that since Trump's May 5th tweets in which he raised tariffs on China, you haven't really seen any consensus changes with regards to earnings estimates for the S&P 500. Earnings are pretty flat since May 5th. And so you've now had increased tariffs on Mexico, increased tariffs now on China. President Trump over the weekend was also toying with increasing tariffs on India. So you've had him now go on the offensive with respect to increasing tariffs, and yet consensus estimates haven't increased. Specifically, you haven't seen any earnings degradation or any consensus degradation with respect to earnings in semiconductors or industrials, two of the sectors that are hardest hit. So I don't think that people are appropriately discounting still in their estimates what the actual impact from tariffs can be. Add on top of that increased headwinds from the global economic trajectory. And I think you're still in an environment where you don't want to be taking risk until some of that uncertainty clears.
You know what?